Let this be a voice of reason to all of you guys that are watching this, that no matter what happens, you always have to stick to your plan. No matter what happens, you always have to stick into the reasons, the strategies, and the principles on why you actually invested, why you actually entered a position, why you actually invested and went into it. Before we continue with the video, I'd like to invite everyone to Investment Conference 2023. This is an event that we co-founded about 10 years ago with the goal to educate people about investing and different investments that are out there. We have a lot of speakers from Randall Chongson, Rex Mendoza, David Lichu, Alvin Ang. But what's interesting for this year also, since I've been pushing and I've been a very, very big advocate of Web3 cryptocurrencies and NFTs, we're adding crypto into the mix. If you want to venture into crypto and NFTs, check out the link down below. It's happening May 27, 2023 at Samsung Hall. We're gonna have 1,000 people, 1,000 investors joining us. So I hope to see you there. Hey guys, so what do you do when the markets are not favorable, when things are not going your way, when they don't go the way you want it to be? When you talk to any investor, they will always say that they're in it because they want to see their investments go up. No investor wants to lose money. No investor intentionally is putting their money because they think that their money is gonna go to zero or it's gonna drop. Everyone, when they start investing, they're heavily optimistic that what they're putting their money on will actually do very, very well. But there's a lot of things that we can control and certain things that are happening also in the economy and different things that are affecting global supply chains. And that's affecting the markets. That's affecting how governments trigger interest rates. That's affecting policy. And as they start to shift also, and as there are changes happening, there's volatility, there's uncertainty, and markets tend to drop. And I've said this in different videos that when people are uncertain, they tend to keep money off the sidelines. When there's lesser money moving around also, people tend to be more conservative. And when people tend to be more conservative, you don't see a lot of money going into assets. And that's one of the reasons why, if you notice it in 2020, stocks, crypto, they moved up massively well for the very reason that there's a lot of money moving around. What if we are in instances like it's volatile? It's not the way you want it to go. Let this be a voice of reason to all of you guys that are watching this, that no matter what happens, you always have to stick to your plan. No matter what happens, you always have to stick into the reasons, the strategies, and the principles on why you actually invested, why you actually entered a position, why you actually invested and went into it. Let this be a reminder that when you buy something or when you invest into an asset, don't just always look at the upside. Don't just always look at how high it could actually go. Always look at also the risk, the downside. Because when scenarios like this and times like this happen, it allows you to act rationally. It allows you also not to be fearful. It allows you to just follow your plan. Please do remember this, that you need to have a plan and a strategy for the upside, but you also need a plan and a strategy also for the downside, so that when things go down, you know what to do. When things go up, you also know what to do as well. I'll say this over and over, it's emotions that will kill you. It's emotions that will destroy the rationality of how you are investing. And what does that actually mean? If you're the type of person that does dollar cost averaging every day, every week, every month, every quarter, or every year, you put in a regular amount of money to buy that stock that you always want, that blue chip stock, the dividend stock, or regardless if it's a tech stock like Apple or Microsoft, or if it's in the cryptocurrency market, you're stacking Bitcoin and Ethereum. Regardless of what it is, the name of the game is for you to be able to just stick to it. If you're dollar cost averaging, then the volatility doesn't matter. If you're buying something that's legitimate, if you're buying something that's game-changing, similar to the other videos where I talked about Bitcoin, then times of volatility will test your conviction about that particular asset. It will test your conviction on whether you're scared. It will test your conviction of how much you actually know about that particular investment you're putting your money into. Because at the end of the day, it's easy to invest in something when everyone is in it. It's easy to invest in something when everything is going well. It's easy to invest in something when everything is going bad. But if you notice what everyone has been saying, the ones that really, really make it, it's the bear. It's when times are uncertain, when everyone's scared. That's where wealth is actually made. Every time there's uncertainty, every time there's volatility, every time it's scary, that's when
you can have the ability to be able to buy things that are cheap, can have the ability to be able to stack and build game-changing wealth also over and over. So it's nice to invest when it's bullish. It's nice to invest when everyone's excited. It's nice to invest when there's a lot of things going on. The economy is well and optimistic. But you always have to remember this. When times are good, a lot of things are expensive. When times are bad, times are scary, the assets, the stocks, the cryptos that are game-changing will be cheap because people are scared. So the name of the game is by finding something that's opposite and contrary to what everyone else is doing. And that's where you spot the bargains. But a lot of those things also require conviction. A lot of those things also require you to follow a set of plans that you will stick with over and over and over. And here's the thing, when you have that conviction, even if your friend tells you to buy or not buy, even if people around you also tell you to avoid and be scared because they're also selling, but you know it deep inside that it's something worth getting into because you've studied it. That's where the rubber hits the road. That's where there will be a test on your conviction. That's where there will be a test on if what you're doing actually makes sense. Why am I saying this? When times are uncertain, when times are volatile, when times are a bit scary, you just follow your plan. You follow your strategy. If you're a technical trader, I've said this in several videos, just follow the charts. And that's what's so interesting about it. If you're a trader that's following support and resistance, it doesn't even matter if the market is bullish or bearish because they move in support and resistance, they move in ranges, and you could either go long if it's bouncing off support, and you can short if it's breaking down. You can short if it's hitting a resistance and starting to fall back again to a certain support level. So there's a lot of iterations, there's a lot of things that you could actually do. But the moment you become emotional, the moment you let fear or greed or you following what everyone else is doing or the recommendations of other people take precedence in the way you transact, in the way you do things, that's when you'll actually lose. I know videos like this I've done over and over, but I just want this to be a reminder to all of you that don't change your plan just because things are scary. Don't change your plan because things are volatile. Don't change your plan because everyone's scared. Don't change your plan because from a price standpoint, it did not go the way you want it to go. Because that's how it is in the market. When things go down, either two things will happen. If you're trading, it's a very, very important decision for you to either short or cut losses. If it doesn't go your way, if the trade doesn't go your way, or if it's going up and it's bouncing, also there's a conviction there to how long will you actually hold on, what will you actually do, and what will be your strategy also when you're up. Please do remember this, that it also works different ways, that when it's up, you need to have the conviction not to sell too quick. When it's up, you need to have the conviction to hold on and maximize that particular trade. Follow your plan. Don't be scared. Whatever your strategy is, just go on with it. Whatever your strategy is, fulfill it to the end. Whatever you set forth on why you went into the market, just go with that. Please do remember this. The technology of Bitcoin doesn't change just because the price is down. Ethereum doesn't change just because interest rates are higher. People will still buy Apple also every time they issue something that's new. Because especially for companies that trade on brand, they will have certain customers that will continue to buy them over and over. So I don't want you to base your investment decisions out of emotion. I don't want you to base your investment decisions out of fear. I don't want you to base your investment decisions just because it feels a bit scary. I'll say this again, money's made in the bear. Money's made when you build game-changing wealth, when everything is cheap, and you have the conviction to be able to hold when people are doing the exact opposite. I guess that's it for now. Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you. Bye.